So today I'm going to talk about a subject that is hugely important in what we do, and I think is one of the key components, as well as having the right strategy, it's one of the key components to trade like a pro. Now that is mindset, the psychology behind trading and how you manage that. The key for me is learning the strategy. That's 20% of what we do. 80% of what we do is between here and here. It's all about mindset and controlling your emotions and being disciplined at the right times, not getting overly involved in what you're doing. It is literally a tick box exercise with some of our strategies. Does it do this? If it does, is it a tradable? It's a tradable pair. If it doesn't meet that criteria, it's not tradable. End of story. Okay? It's not hard to do, and it takes the emotion out of it, having a strategy that is a tick box exercise. Does it do this? Does it do that? If it does, we go. If it doesn't, we don't do it, we stay on the sidelines. Simple as that. But more than that, you have to be comfortable to take risks. You're going to be risking your money, real money, okay? This is not going down the casino and putting it on black and red. This is increasing our chances of winning by using a proven strategy with the right risk-reward ratio, and that absolutely is key. We risk 1% to make 3%, and if we do that, we know that we only have to be right 30% of the time. Our strategies are proven to be correct 45% of the time, which is giving us a very, very nice, profitable year to date. And clients are happy, we're happy, everybody's happy on that basis. So you're going to be taking risks. You're going to be putting real money on that trade, on that spread bet or CFD or whatever it is you're trading. And it is real money. It is real money. You might not see it because it's electronic, but it's exactly the same money you've got in your wallet. It's exactly the same money that you spend on dinner or at the cinema or pay your mortgage with. And you've got to be able to take that risk, to handle that risk. And that's why we use a risk management strategy. 1%, consistently 1% of your portfolio. Now, why is 1% key? You could trade 2%, we don't. We trade 1%. Any more than 2% I think is absolute madness. But we trade 1% of our account, because if we trade 1% of our account, I'll show you. So if we had a £100 account, okay, and we trade 1% of it, that's £1. Let's say we lost that trade. So that 1% means that our account now becomes 99. Let's say that we continue losing. 1% of 99 is not 1, it's no longer 1, it's actually 9.9. Okay, so you can see that our losing amount gets less all the way down, which actually means that it isn't 100 trades to wipe your account out. 100 trades is a lot of trades already. It's way more than that. Okay, so you can see that because we're reducing the amount of our risk all the time, we're never going to run out of money. Okay, our account is never going to be wiped out, and that's why we use a 1% risk management and always moving it. Never set at 1% of 100, £1 all the time, or $1, whatever it is. We reduce that all the time. Equally, when we get above 100, so let's say we made instead of having a losing trade, we had a winning trade, so we're a +1, so we become 101, and of course your 1% becomes 1.1. Okay, does that make sense? Yeah, good. 1.01, by the way. So you're increasing your risk and you're reducing your risk as you make and lose money. So it's important that we take those risks, knowing that we have that safety net, that we're never going to wipe our account out if we follow these rules. If you don't, if at this point, whatever that figure is, maybe it's £9.20 or $9.20 or $9.10 or something. If at that point we decide, I want to get that money back, I'm going to risk 2%, well, this is going to start diminishing much more quickly, right? So that's why we trade 1% and do it consistently. That's the key. Don't break the rules. If you're 1%, stick with 1%. So you've got to be able to handle those risks, and there are tools that you can use, there are strategies that you can use that are going to help you with the psychology of managing that risk, okay? You've also got to adjust to changing markets. Now, markets do change. Brexit, right here, right now, again, is killing pound dollar, pound yen, euro dollar, not so much euro dollar, but a little bit, but also pound yen. Did I say pound yen? Pound yen. So we've taken those pairs off the table. We don't want to trade them. So the markets are fickle things. You've got to be able to adapt to them, stay out of the markets when you want to, and you've got to have the discipline to see when it's not working, to know when it's not being normal. I always talk about normalized markets, and it becomes a bit of a feeling. You know when the markets are when they're behaving, when they're delivering, and you know when they're acting out of character as they are at the moment, unpredictable. So stay out of the market. Again, that's a way of handling the psychology of things. Don't try and beat the market, because that's going to dent your confidence. Stay out of the market, because that's a confident decision. I've made that decision to stay out of the market. The decision hasn't been made for me by the market. It hasn't beaten me into submission. So I'm proactive, I'm always positive about my decision making when we see those markets changing. You've got to be disciplined. Again, we talked about discipline here. So it's 1%, a reducing 1% or an increasing 1% as your account fluctuates up, down a bit more, down a bit more, and so on and so forth. So you've got to be able to be disciplined with that. Disciplined that you follow your rules. Now, I always say to people, don't break the rules. You can change your trading strategy if you do it in the right way, and that is to back test it, demo test it, live test it before you make those tweaks, okay? You've made those tweaks when you go live, of course. So it's not just a question of, it's not working, I'm going to change it around now, I'm going to start messing around with my risk management or my trade management. There's got to be a formulaic process, a well thought out decision to do that, rather than just a random approach of trying something. You may as well go down to the casino and put your money on red or black. So be disciplined, okay? View the markets objectively and make sure that you're viewing your strategies objectively as well as the fine-tuning and the tweaking of them. Don't get excessively emotional over a trade. And I mean a winning or a losing trade. I always say to people, good day, I'm okay. Bad day, I'm okay. I don't want anyone to know where I'm at with our trading. It's written on the board, you can always see it in our office, but I don't want them to read it from me. If I've had a winning trade, guys, we've had a winning trade, fantastic. If I've had a losing trade, guys, we've had a losing trade. Because I know that the system is going to deliver all the time. I don't need to get caught up in the euphoria of a winning trade and allow that, as it has done in the past, it has for all traders, allow that over emotion to boost my confidence, so that you change your risk management. Maybe go back to this 2% that we talked about earlier. So you've got to be unemotional about the whole thing. You're almost flatlining, okay? I always say to people, trading should be boring. It never is for me. I absolutely love what we do, but it is boring. It's not something that I allow myself to get overly emotional about. A losing trade. I always know when we have a losing trade, A, I've got the potential of learning something from it, but B, also, it's part of the process. There are losing trades. Remember, I only have to be right 30% of the time, wrong 70% of the time to make a 2% profit using a 3-to-1 risk-reward ratio. That's a very, very low statistic of being right 30% of the time. 3 trades out of 10, 7 could be losing trades, and I'm still making money. Now that helps with the psychology of things. Stick with the process. Be self-disciplined to do that. So accept the risk. You may not always be right. You may be right some of the time. You may be wrong the majority of the time. But if you're doing it properly, you're still going to be making a profit. One thing that's key to developing that confidence and helping you with that mindset is the support of like-minded traders. Now, I've done many mindset groups in the past, and I always say to people, I always want to be the dumbest person in the room. I'm going to say the same thing to you now. Even if you're new to this, come and be the dumbest person in the room, because that's the way you learn quickest. So we've set up Coffee with Steph, a group of like-minded pro traders that want to get to the best that they can be by sharing their knowledge, sharing their information with others. Remember, the best way to learn is by teaching somebody else. So you're helping others, you're helping yourself. We'll see you at Coffee with Steph.